Welcome to Pioneer FX. Today is the 22nd of May. Hope you guys are doing well. Coming towards the end of the month. Still expecting to see volatility tick up. We've had some slight adjustments with regards to large speculators and commercial hedgers. So still expecting to see volatility push beyond 30, and then our main objective of 50 being hit long term. Looking at the fundamental ranking from last week, yes, we did have a lot of high risk data. There were slight adjustments with regards to the yen. The inflation has started to tick up within the currency, so we started to see the yen sort of slow down with regards to the data release. It was extremely bullish, now sort of starting to point towards the neutral stance. However, large speculators and commercial hedgers extremely long, especially with large speculators. We're going to run into that shortly, so just bear that one in mind. With the VIX pushing up, we could potentially see the safe havens like the yen push up, as well as potentially Swiss franc. But we're looking at Swiss franc, they are looking to sell it, so we're going to look into that shortly as well. With regards to the dollar, still extremely bullish, currently sitting at 36. Large speculators added onto their contracts from last week, so still continuing to see some strength within the dollar, potentially through to this week as well. Canada still weak, around 28, looking for sales there. New Zealand looking for sales as well, potentially through to this week. Euro starting to see some strength kicking in due to that interest rate hike potentially, so still looking for some longs there. The pound has started to shift its basically bias with regards to short, so they're starting to go within a neutral stance but projecting towards the buy territory, so do bear that one in mind. China sort of in between, still within the neutral stance, and that's about it with regards to our fundamental ranking there. So yeah, do take note. Let's move into the charts and have a look at what we are expected to see potentially through to this week. Just share my screen, sorry about that. Right, so let's just have a look at the reports as well as my FX book. So for this upcoming week, we do have a lot of PMI data releases. Last time I checked, started off on Monday, relatively quiet. However, we do have the IFO business climate high risk impact news release on the 23rd, which is tomorrow at 9 a.m. This is through to the UK session. And then later on at night, 11:45, we do have retail sales for New Zealand. We're looking to New Zealand shortly. So there's a lot of high impact news with regards to New Zealand as well as Australia. We have their composite PMIs, market composites PMIs releases at, well, on the 24th midnight. So do take note of these, because we do. The reason why I'm saying do take note of these high risk impact news is because we may have a major movement or potentially high volatile moves for these pairs that we're currently looking at. It may go in our favor or it may go into discounted mode. So we will look into that shortly as well. Followed by the Japanese yen PMIs. We've got composite services, manufacturing, 130 on the 24th. Pushing down. Euro Germany services, composites were 8:30 a.m. followed by the S&P composite services and manufacturing. Again, high impact news. So there's a lot of PMIs coming out this week. So just bear that one in mind. 9:30, 24th of May, we have market services, composites, PMIs for the pound as well. 9:30, pushing through. And then we have the BOE Woods speech, but that's going to be low impact news. Continuing down on the 24th. So Tuesday is going to be really, really busy, guys. In the morning, UK time, as well as Asia. And then we have the dollar market services PMIs releases as well. So heavily impacted, followed by at 5:20 Fed Chair Powell's speech. So there's a lot going on Tuesday. We do need to make sure we are noting these down as well. So we could potentially enter through on Tuesday. We could potentially see some discounted rates, but we'll look into that shortly as well. Wednesday, Euro GDP growth rate, consumer confidence for Germany. We've got the BOJ Karuda's speech, medium impact news on the 25th at 12:05. 1:30, we've got the durable goods orders, the usual stuff for the week. And then we have the FOMC minutes at 7 p.m. on the 25th. So relatively quiet there for UK morning session on Wednesday. That's after the consumer confidence at 7. Thursday, the usual jobless claims, GDP prices, that's going to be low to medium price index for the dollar. And then we've got the GDP growth rate for the first quarter, high impact news at 1:30 on the 26th on Thursday, followed by CAD retail sales. So heavily impactful there during the afternoon, 1:30 on Thursday. And then Friday, we've got the CPIs, inflation, core inflation for Tokyo, low impact there. Retail sales for Australia at 2:30 on a Friday, 2:30 a.m. that is UK time. And then pushing down, we've got Euro, which we've got the Spanish retail sales, high impact at 8 a.m. And then we've got the consumer, the inflation as well as consumer expectations and consumer sentiment for the dollar at 3 p.m. And then that's about it with regards to this upcoming week. So heavily impactful on a Tuesday as well as Thursday. And the rest of the week is going to be relatively quiet. Let's dive into the charts now. Let's have a look at USDCAD. So looking at the USDCAD, let's have a look at it from a weekly basis. You can see here it formed a bearish sort of engulfing candle there, an evening star formation. So there's going to be a lot of sellers coming in. Looking at this from a weekly perspective, you can see that there's a resistance here, there's a resistance here. A lot of traders are looking at this now. I'm thinking sell, which is which is exactly what we want. Let's just cross-check this with the DXY on the weekly basis. You can see that, yes, on the weekly basis as well. Let me get rid of these lines. We were consolidated for quite some time, and now price has broken down with the bearish engulfing candle there, signifying potential slowdown. So if we look at this on a weekly basis, that is, there's a resistance here, and you can see that this resistance was broken. And now it just sort of retested it. So looking to see 102.972 broken this week. If we do get this area pushing down even further, then we could potentially see some weakness kicking in for the dollar. However, I feel like this is all a trap. Just trying to gauge as many traders potentially to go short from last week and then gear up. So we're still looking for that 109, 108 target to be met. Looking at this from a technical perspective, there's still a lot of room for it to push higher before come pushing down the sort of long term for the dollar here, looking at the DXY. On the daily time frame on the DX, you can see that price consolidated for quite some time, and it's just still within this range here, still currently within the range. I'll class this as a range from here to here, so we're going to keep a close watch on this. I feel like a lot of sellers have come in since the 13th of May, since last week and the week before that. 1, 2, 3, 4, 5, 6 days of price pushing down, a lot of sellers coming in. We could potentially see some stops being hunted from these highs. So there's a lot of stops up there. So targeting 108 potentially through to this week. Right, look at that. This on the daily time frame now. Get rid of that. We could stick a trend line here. And also an inner trend line right here. Point 1, point 2, is this the third touch? It could be a third touch here, so do keep an eye out of this one. We haven't really got this trend line hasn't really broken, so price is still consolidating. We could potentially see a touch there on the 4 hourly now. Let's just refine this. We do have that third touch actually, point 1, point 2. There's that third touch. Let me get rid of this. We could get a reaction now from current price. So what I tend to do is I box out the third touch, which is this doji candle right here, and you can see price immediately pushed higher. So we could see some strength kicking in for the dollar this week. We could see some strength there, followed by, let's have a look at this in further detail here in terms of price action. Volume, 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 price is above the volume. So we could potentially see these areas targeted. Just trying to look for a best fit for the dollar here. For the DX, that looks like a better fit right there. So this is our play area potentially through to this week. So what to expect with regards to the DX right now is if it's above 102.838, if price is above this, we could see a continuation to the upside. If that breaks 103.802, we could eminently see 104.86 targeted. And if that breaks, it's all clear to push higher towards our target of 109. If this area here is broken 102.838, we could potentially see a continuation to the downside. However, looking at this from what the commercials and large speculators are doing, you can see here from last week, which was on Tuesday. What was the day on Tuesday last week? It was the 17th. So you can see here from the 17th now. 17th was just there. There was that bank level that I drew out last week. On Tuesday, you can see here, eminently broke it, continued to push down and continued to go lower. Is there a bank level here that we can work with? On the 3rd of May. 3rd of May is up here. So even broken the 3rd of May level. Let's have a look at this on the 27th, 26th. So the 26th level, 26th level is just here. There's another scenario whereby you can potentially, if we do see price breaking lower, it could react from this bank level here, previous bank level of the 26th. If we do get like a pin bar formation or a rejection, then we're all clear to go high. So that's another scenario as well. So do mark these bank levels because they're pretty important. It tells you the direction or the bias for this upcoming week. So on Tuesday, do mark out the new bank level, and then you could use that as your sort of bias. Sometimes at times it does tend to break through, retest. I'll give you an example as to the previous ones that we did have a look at potentially through to this week as well. But overall bias for dollar is definitely long. As soon as we do get a break of this trend line, high price is currently above the 102.838. Looking at this from a 4-hourly candle now, we had massive impulses pushing lower, signifying weakness from 105. But there's a lot of stop losses up there. So let's push through USD-CAD. Let's have a look at USD-CAD here. USD-CAD, looking at this from a weekly perspective, it did form that sort of bearish engulfing candle, rejection, rejection, rejection. A lot of traders are looking at this, looking left, weekly time frame, they're potentially looking to sell. On the daily time frame now, you can see here that we did spike through, hit some stops, and now came back down again towards the end of this week. Towards sort of midweek, we started to push lower from the weekly perspective. So trying to bring in as many sellers as possible from the daily. 4-hourly now is heavily consolidated here. You can see here it formed a massive M formation, left shoulder, right shoulder. A lot of sellers coming in as well looking at this. But we are sort of aiming for 1.338. Let's just clear our screens and focus on price action on the 4-hourly. So this is the play field potentially through to this week here. A lot of resistances have been hit. A lot of traders potentially looking left and selling this one. So what to expect now is potentially we could get a breakthrough potentially down towards 127.189. Then from here, looking for any forms of rejection or any forms of volume kicking in. So this is the best area to potentially look for longs for USD CAD. We could target 1.3 as our first point of target. We could see price come up as high as 1.34. So we're targeting potentially 1.3382 for this week. There's a lot of volatility kicking in. We need to have a look at volatility as well. We could also have an imminent push higher, hit our target, break through that target, potentially consolidate here because most traders are going to be looking left, and then ping towards 1.33382. If this level here breaks 127,189, you could see it push lower, potentially grab some liquidity from these lows, and then look for any forms of rejection to push higher. But overall bias for USDCAD is long. Let's have a look at volatility actually. Volatility is very interesting here, looking at the price action, especially on the 4-hourly. Most traders are looking left. They can see rejection, 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 resistance here, plenty of stops to be targeted at 40 and at 50. Just purely looking at price action there on the daily time frame, you can see now price has started to weaken around 32.5. So loads of traders are looking to sell this one. However, looking at what they're currently doing on cut base, could potentially even start to trade or look into trading the VIX futures. Because looking at this right now, large speculators have started to push up since around April 20th of this year, and we started to see price push up. However, retail traders are looking the opposite way. Retail traders are actually selling from these highs here because they're obviously looking left and they can see resistance, resistance, resistance. And also commercial hedgers have given up their long contracts. So we could eminently see 40 and 50 as our target for the VIX. So volatility is bound to push higher, which is great for retail traders, day traders as well. So looking at this targeting 40, 50, so that target still remains. However, looking at the play area, looking at where price is due to bounce from, looking at this from a 4-hourly perspective, it's either going to bounce from 26, you could potentially see it push lower here. You could target 26 to look for buyers, or you could push lower, wipe out as many buyers as possible because they can see support here as well, and then go for that long target or an imminent push higher. So these three scenarios most likely bound to play. So yeah, I will take a screenshot of these trades that we're currently looking at and post them through Telegram. New Zealand dollar, this is another one that we're currently looking at on a weekly time frame. It did form that sort of, I wouldn't say bullish engulfing, but it looks like a tweezer bottom here, signifying that price wants to push higher. On a monthly, however, there's plenty of room for it to push lower. You can see that massive bearish engulfing candle. So we could potentially see New Zealand dollar melt from the start of this week. Because last week it pushed right the way up for a few days now. So still looking for weakness to kick in for New Zealand dollar. It is on a downtrend as well. We could potentially see it push as low as 0.6. Let's look into this now on the 4-hourly. It's been quite choppy here from these lows actually. Push down, push up, push down, push up. So let's get rid of some trend lines. Right, okay, so this is interesting now. A lot of buyers stepping in because they can see this trend line being broken. 0.1, 0.2. There's the third touch. Yeah. So we've actually hit the third touch, 0.1, 0.2. We're on the third touch now. We're on this third touch right here. So, and the price is currently consolidating from it. So what we'll need to do is mark this out. You can see the trend line has been broken. However, price hasn't broken through, just really consolidated. So we can see major movement happening from these areas here. From last week, on the 17th was all the way down here, price. Let's draw this out actually. You can see how powerful these bank levels are actually. So on the 17th, it's just there. At times it works, at times it doesn't. You can see price immediately broke out and then broke back in and then broke out again. So it broke in and out almost 3-4 times, but it gives you a good direction as to where they're looking to take it, potentially through to that week. And you can see here through to this week, it did push up, because on the weekly, it was more of a tweezer bottom. So I'm expecting to see it push lower anyway, but looking at price action here now, it's currently consolidated since the 19th of May. If we do get a breakthrough, either direction, that is, we can see an imminent push higher or lower, but my bias is lower. So we could potentially have a fake out, perhaps as high as 0.64518, and then a melt through towards 0.63, and then targeting 0.624 for the week. And if that breaks, we're potentially going to be pushing through towards 0.6 as a psychological figure. 0.6 is our target for potentially this week. Or again, we could have an imminent shift from current price. If this third touch of the trend line breaks, we do wait for the retest of that breakout. Then we could see 0.629 and then target just there. Or we could see an imminent volume tick higher, grab as many stops as possible, trick traders to go long, potential retest, and then break through. So these three scenarios most likely bound to play potentially through to this week. CAD yen is an interesting one. Reason being is because if we have a look at trading style, let's go back to trading style. Since we do know volatility is bound to push up, we could potentially see the yen kicking up as well. And the funny thing is they're actually gearing up for it. You can see here, large speculators have increased going long and decreased significantly their contracts of going short. And also their long contracts, the commercial hedgers, they've actually got rid of 8,000 contracts. So we could potentially see some yen strength here. Not only that, retail traders, look at that, retail traders are overall short. So if they're overall short, what do you think they're going to do if volatility pushes up? You can potentially see VIX futures for the yen tick up potentially through to this week. Looking at this here, look, they've been decreasing their contracts since April and also increasing their contracts slowly since April as well. So we could potentially see a shift up for the yen. So CAD yen, trades like CAD yen, pound yen potentially could be the trade of this week, but we'll need to have a look at this in further detail as to where the price could react from. Weekly time frame, you can see here now, we can see here now this formed a bearish engulfing candle, followed by a sort of a bearish doji candle. So it has been, do notice guys, it has been priced since March, has been ticking up. So there's a lot of liquidity down here as well for it to be grabbed. We are still short for CAD yen. What to expect though through to this week is we could potentially see price kick up potentially through to this week. And then from these highs, we could see an imminent shift lower. Targeting 97 as our target, as our first point of target for CAD yen. And second form of target is 91.943. So these are the two targets we're looking at potentially through to this week. But I would love to see CAD yen literally just spike through, you know, grab as many stops as possible. And then from these highs, this will be a beautiful a beautiful area to look for entries to go short. Because we haven't had that yet. You can see that it's been trending down slowly but surely, but I'm looking for that massive wick up. And we do have some yen news as well, some PMI data releases, whereby we could potentially look for sells as price ticks up for CAD yen perhaps. Plenty of stops up here as well. But do note this horizontal dashed line, that is the 4 hourly sort of support. So there's a lot of traders also looking left. Let's actually see on the daily. We could potentially see on the daily better. See that most traders are looking left, and they are buying that. They're buying that as well. So looking at that on the daily, you could potentially see, and on the 4 hourly, that a lot of traders have stepped in to go potentially go long from these highs, but we're looking to take it the other way. So we're focusing, my focus would be USD CAD, New Zealand dollar, and CAD yen perhaps through to this week. USD Swiss franc, I did take out a post. I did send out a screenshot actually of potential longs from these lows here actually, since price has been melting through for the USD Swiss franc. Yes, there could be a lot of liquidity down here. However, I feel like this is a major trap here, waiting for it to be hit. It did form a head, left shoulder, right shoulder here. Technically speaking, this was a beautiful trade to take technically. However, I feel that this level here is going to be broken, and I'm targeting 1.02 as my long-term target. Price is still above this sort of liquidity area over here. It did form sort of a morning star formation. We could perhaps see an imminent shift higher towards 0.995. Looking at this from the daily perspective, you can start to see that price has started to slow down from these lows here. We could potentially have a 3-pin formation, weekly time frame, massive bearish engulfing candle. So a lot of traders are looking at this and they're thinking sells all day. So we could potentially see it pierce up and grab as many stops as possible. But do know price has been ticking up slowly but surely as well. So it could go the other way as well. But I do favor longs for USD Swiss franc. So we'll see how this one plays out. I'm not looking to get into any pound pairs this week. Reason being is because looking at the trading style, let's have a look at trading style one for the pound here. you can see that there has been a slowdown. You can see here there has been like a directional change here. You can see price has slowed down in terms of commercials. They've started to decrease their contracts slowly here. So we could potentially see pound strengthen in the future. However, large speculators, they have been overall short, but you can see here now it's pretty flattened out. So I'm not looking to trade any pound trades potentially this week. Just purely off the back of this. So I'm basically going to be taking profits for any pound pairs or for any pound trades actually. Do look to take profits through with regards to any pound. So pound dollar, not looking to trade this one just yet, but it looks increasingly, just looking at it from a technical perspective, it looks amazing to potentially take longs from these lows, but I'm not looking to trade any pound pairs. So taking that off the list this week until we see some further clarity. As to where they're looking to take it. Euro Swiss franc. Euro Swiss franc looks amazing for it to target 1.06. It has been pushing down. It has been following price action similar to the dollar. Let's have a look at the dollar. So the dollar, no, it wasn't. Similar to, what was it, pound? No, not pound, CAD yen. Nope. Okay, so similar to USD CAD, you can see here an M formation and push down. Yeah, so similar to Euro, to this one here, USD Swiss franc. So same thing with regards to USD Swiss franc, Euro Swiss franc. I'm still looking for that target of 1.06 to be hit. Get rid of these bank levels. That was the bank level for last week. You can see now, so the bank level from the 3rd of May, you can see is starting to react with it. If we do see it hover above that bank level, we could potentially see our target being hit. Or we could potentially see price push lower if we do get any form of reaction from this volume area over here or liquidity area. We could potentially see our target being hit through to this week for Euro Swiss franc. Volatility, as discussed, we're still looking for that 40 to be targeted. And with regards to gold, actually, from last week, it did hit eminently. It hit our first target. And then from there, it started to push up. And now what I can start to see is there's a lot of traders now looking at this from a 4-hourly perspective, 0.1, 0.2, and here's the 3rd touch of our trend line. A lot of traders are looking at this right now. This is the head formation, left shoulder, right shoulder. They're looking to buy this. Technically, it looks like a buy. Plenty of liquidity to be grabbed from these highs. So let's just have a look into this. I am still looking for that 1,750 to be targeted long term. Since we do know dollar is bound to push higher, we could see gold drop. So since it's on this 3rd touch of this trend line, I strongly suggest you place this trend line as well from the 4-hourly perspective and just monitor it. Monitor this breakout range. If it does break out, either way, it's going to literally blast off or blast high. Or if it does break this lower, we could definitely see 1750. What's happening here? So this is a strong area, a strong breakout region actually. 0.1, 0.2, there's that 3rd touch, that doji candle right there. Let's just have a look at it on the reports just to double check to see exactly what they're planning to do. However, since we do know dollar is still increasing, and look at that, they've increased 12,000 contracts going short for gold. So that's eminently telling me short right the way. Even though overall they are long 283,000 contracts, but from last week they've added 12,000 contracts. But then again, looking at what the hedges have done, they've removed 15,000 contracts going short. So there is a data of conflict, two datas of conflict. Which one do we follow? Do we follow the large speculators or the hedges? I would suggest you guys potentially follow the hedges, because the hedges, they're more sort of forward looking. However, since they did reduce 15,000 contracts going short, we could potentially see gold up. So that means dollar up, gold up. A lot of traders are going to be confused. But then again, retail traders at 50,000 contracts going long. So they're heavily buying at current price. So looking at this, you can see that they've started to give up the contracts going short. So they were short, giving up their contracts. Large speculators are overall net short. So this is telling me short all the way. So we're going to continue to hold shorts regardless of what we can currently see here from last week, change plus 12,000, minus 15,000. I feel like these are potential traps. Just looking at it from a visual perspective, clear as day where they're looking to take this. They're looking to push this further down. Retail traders above zero. Retail traders heavily long, actually. They are currently 72% long. So that's telling me immediately or eminently we're looking to short this one. So we can see why they're long. We could actually see why they've increased going long, because looking at this from a 4-hourly perspective, they're looking at this supply area right here and placing the stops at 1770, 1772. So I do favor shorts. Yes, if we do get a breakout, we could potentially see a retracement perhaps within these areas or within that 1977 region, and then eminently 1750. Since we do know volatility is bound to push up, we could see a lot of wicks to the upside, and then long term we could see it come down towards 1750, but definitely targeting 1750 for gold. Is there anything else that I've missed out? Let's have a look at New Zealand yen, actually. That was one of the trades that I was looking to target. So yeah, 76.8 looks reasonable. Again, a lot of traders are looking left. They can see a nice supply area over here. They're potentially buying this. They can see left shoulder, right shoulder. If we do get a break above this area, we could see 85.221. And then from these highs, it'll be a good area to look for shorts. Let me get rid of these arrows. Our psychological stops 87.856. That's a good area to place it, actually. So I'll leave that as it is. So definitely looking for shorts from these areas here. If we do get a spike above, a break above this area, potential trap zone. Looking to target 76.857 free to this week as well. New Zealand yen. Is there anything else that I've missed out? Any other currencies that you wanted me to have a look at potentially free to this week? Potentials. You can unmute your microphones, you know, if you guys got any questions. Is there any questions before I finish up? Any questions? Thanks, Lee. Any questions, Jermaine? Any trades that you're potentially looking at to get into potentially through to this week that we could potentially have a technical analysis and a fundamental bias on it before You do place that trade. So we can see eminent breakouts looking at these trades from a technical perspective. I do favor New Zealand yen shorts, USD CAD longs. So these are our directional bias for this week. New Zealand dollar short, CAD yen short, USD Swiss franc long. But these are, the USD Swiss franc is least of my worries. Focus on these three for this upcoming week, or these four perhaps, together with gold. Let's bring gold up. Why ain't it going up? Euro Swiss franc, perhaps longs. Volatility aiming for 40. And that's about it, really. That's about it. We will look into also some day trading sort of techniques, since we do see volatility pushing up. We could potentially have a few live sessions, perhaps sort of intraday, looking at intraday trades. But these trades that we're currently looking at, they're sort of weekly trades. You're looking at EU, Euro, USD. So since Euro is pushing up on, pushing up sort of on a temporary basis, as well as dollar, I don't see any movement there for Euro USD, but we could have a look at it. Let's have a look through. Right, okay, so looking at this from a technical perspective, it looks like it's going to push really, really high. Let's have a look at this from a weekly. So it did form a bullish engulfing candle. So these looks like the lows have been hit. On a monthly, however, look at this, guys. Massive, massive bearish engulfing move. It did it break this area here? Not quite. So we could potentially see further movements lower, looking at it from a monthly perspective. However, weekly, this looks like it's stopped out at 1.03, 1.04. Let's have a look at Euro USD. There's a lot of pips to be made this week, guys. And I do suggest you guys, whenever you do fall into, whenever you do make as many pips, so say, for example, you've made, I don't know, 70, 80 pips for that day, I do suggest you guys do take your profits, because volatility is bound to spike up. And when volatility spikes, there's a lot of retracement. There's a lot of high volatile moves happening sort of intraday. So looking at this from a daily perspective, I like to make my horizontal daily lines solids. So we're going to change this to solids, that to solid, this area solids. There's plenty of, if volatility does push up, I do favor Euro USD longs actually, because looking at this from a daily perspective, since last year 2021, it's been pushing down. So there's a lot of stops. If I was to just draw a line here, you can see stop losses, stop losses, stop losses, stop losses, stop losses. Volatility come, one line up perhaps towards 1.3. That could be the case potentially. Just looking at this from a technical perspective, where the money is bound to flow to and from. Long term, that is. Let's have a look at this from, let's actually put in some trend lines. Now, just looking at this from a technical perspective, you can see here, left shoulder, the head, and then potential right shoulder. Inner trend line, a further inner trend line right here. 0.1, 0.2, there's the third touch. And from that third touch, look what price did. It broke down, broke out, retest. So it looks like from the inner trend line, it's bound to come and target stops below 1.035 perhaps. But definitely favoring longs for this one, actually. Just looking at it from a technical perspective. Reason being is because we can see, you see this 4-hour candle here. This 4-hour candle broke through and took out all these previous candles here as well. And the body of this candle is above these wicks. And price hasn't really broken below the body of this candle. So I do favor longs for this one. Could potentially push down lower, but I don't see it pushing down that low, to be honest. I see an imminent push up. That could be the target there. And yeah, just looking at it from a technical perspective. Fundamentals, I wouldn't really trade this one just yet. Yeah, you know, when you look at retail sentiment on my FX book, I don't really believe retail sentiment on my FX book, to be honest with you. Because the reason being is whenever price pushes up, electronically, it basically detects it as sellers coming in. I don't really believe in none of that sentiment. I truly believe in price action, what you currently see in the markets, where the actual support and resistances are, where the traps are. And that's how you really, really succeed within trading. Whereas if you do look at my FX book, looking at sentiment, it basically it's not as accurate as what you can currently see with your eyes. So say, for example, Euro USD, yeah, let's have a look at my FX book once more. Hence the reason why I don't really look at sentiment. I don't really glaze my eyes on it. Sentiment, so say, for example, here, you can see Euro USD now, they've started to go long. Let's have a look at positions, daily. You can see here, since price has started, since say like over here, yeah, price has started to go down. As price was going down significantly, you can see, look, buyers coming in. This is all electronic, to be honest with you. And then when it was consolidated, it started to flatten out. You see that? So I don't really look at this. This is just pure bollocks, to be honest with you. Nah, not for me. Any other questions? Any other questions before we finish up? Yes, we can see buyers coming in, looking at it from a technical perspective. Hence the reason why I stated it could potentially push lower before spiking up to push higher. But just looking at this from price action, it really wants to push up. The money is up, is higher than lower. Any other questions? Well, I hope you guys have a fantastic week, and I shall see you guys on Wednesday. Thanks, Lee. Take care now.